What if I told you that money isn't wealth? That every dollar in your pocket is actually someone else's debt, a promise created out of thin air? And what if this system, the very one we depend on to survive, was never designed to make you free, but to keep you chained to a cycle of borrowing, working, and paying forever? This isn't science fiction. It's the real history of how our world quietly transformed from economies of value into empires of debt. And the story begins not in modern banks or stock exchanges, but in an idea born centuries ago. Long before credit cards and digital payments, there was gold, real tangible wealth. You could hold it, measure it, and trade it. But gold had one problem. It was heavy, limited, and couldn't easily move across borders. So governments and bankers created paper certificates, simple receipts that represented gold. People trusted them. After all, the paper was just a placeholder. But that trust was the first illusion. Behind closed doors, early bankers realized something. Not everyone would come back to claim their gold at once. So they started issuing more receipts than gold actually existed. That was the birth of fractional reserve banking, a system where money could be created from nothing, backed only by trust and debt. This quiet trick multiplied money supply, expanded trade, and fueled economic growth. But it also concentrated power, because whoever controls credit controls nations. By the 17th century, the idea had matured into institutions like the Bank of England, founded in 1694. Its mission seemed noble: stabilize the economy, fund wars, and manage national debt. But the deeper reality was this: from that moment, governments no longer issued money. They borrowed it with interest. As empires expanded, so did their debts. Kings, merchants, and nations began borrowing against the future, financing wars, colonies, and industries. And who profited? The lenders. Banking families like the Rothschilds, and later financial titans like J.P. Morgan, realized they could do something no king could ever dream of: rule through credit, not crowns. By the 19th century, the world was no longer run by gold or goods, but by bonds, promises of repayment. National debt became the backbone of global power. Then came the Federal Reserve Act of 1913, a turning point for the United States and, eventually, the world. The Fed was sold as a guardian of stability, a protector against financial crises. But in reality, it handed the power of money creation to private bankers, institutions that could lend to the government, charge interest, and expand the money supply through loans. Every dollar created was no longer backed by gold, but by debt. And here's the key: to keep the system alive, more debt always had to be created. That's the hidden paradox. If everyone paid off their loans tomorrow, the entire system would collapse, because the money itself is debt. The illusion held for a while until 1971. That's when President Richard Nixon severed the dollar's final link to gold, ending the Bretton Woods system. From that day forward, money was no longer a promise to pay gold. It was just a promise, backed only by government decree. Fiat currency, as economists call it. Value by order. This single act didn't just change the US, it rewired the global economy. Now central banks could print without restraint. Politicians could spend without limits. And the world could drown in debt, disguised as prosperity. Between 1971 and today, the global debt-to-GDP ratio exploded, from under 100% to over 350% worldwide. Every boom since, the tech bubble, the housing boom, even modern stimulus packages, has been fueled by borrowed money. But here's the twist: as the money supply grows, each dollar becomes worth less. Prices rise, savings erode, and ordinary people find themselves running faster just to stay in place. Inflation isn't an accident. It's a design, the quiet tax that feeds the debt empire. So what does this mean for you, for me, for the world? It means that every paycheck you earn, every loan you take, every tax you pay, reinforces a system where debt equals money and freedom equals liability. Household debt in the US is now over $17 trillion. Global debt? Over $330 trillion, according to the IMF. That's more than $40,000 per person on Earth. But here's the deeper control mechanism. You can't opt out. You need credit to buy a home, debt to get an education, loans to start a business. Even governments borrow endlessly to pay for promises they can't fund. The machine feeds on itself, and it doesn't care who gets crushed underneath. And while we're distracted by political battles and social divisions, the debt grows silently, exponentially, almost mathematically guaranteed to reach a breaking point. Every generation has tried to fix the system, but always from within the same rules that created it. After the Great Depression, they created new regulations. After 2008, they bailed out the banks. After COVID, they printed trillions more. Each solution just pushed the problem further down the road, inflating the next bubble, deepening the dependency. Because the truth is, you can't solve a debt crisis by creating more debt. But that's exactly what every central bank has done. The quantitative easing that saved markets, it also made the rich richer. Because when money is cheap, assets inflate. And when assets inflate, those who own them gain power over those who rent them. It's not a conspiracy theory, it's arithmetic. If this feels familiar, that's because we've seen it before. Ancient Rome devalued its coins by mixing silver with cheap metals, until citizens lost faith in the currency. The empire collapsed soon after. The Weimar Republic printed so much money that people used banknotes as wallpaper. Today, it's digital, zeros on screens instead of bills and wheelbarrows, but the pattern is the same. Every empire that tried to create endless wealth through debt eventually faced the same truth. You can't print trust. And once that trust breaks, the system resets, violently. We're already seeing the cracks. Record inequality, unsustainable debt, and nations quietly stockpiling gold again while the public drowns in credit. History isn't repeating, it's rhyming. So what can we learn from this hidden empire built on debt? First, understand the illusion. Money isn't real wealth, it's a claim on future work. The system depends on your belief that it has value. Second, debt isn't just financial, it's psychological. When entire generations are born owing, they stop questioning the structure that enslaves them. Third, power follows credit. Those who control money creation shape everything, from wars to elections, from property prices to public policy. But awareness is the first step out of illusion. The real revolution won't come from riots or resets, but from understanding, from people learning how money truly works and demanding systems that serve humans, not the other way around. So the next time you see a dollar, remember, it's not just paper, it's a story of promises, power, and control. And the empire built on those promises still stands today, vast, invisible, and quietly feeding on our faith. But no empire lasts forever. The question is, who will see the collapse coming, and who will be caught unprepared when the illusion finally breaks? Soft music fades. Pause for reflection. If you found this story eye-opening, share it, because truth only spreads when people question what they're told. And for more deep dives into the hidden forces shaping our economy, subscribe and stay awake, because the next chapter of the